For you to be profitable in crypto market and other financial institution market, you must know the movement of the price, regardless of the trading strategy you are using. Either you are trading supply and demand, either you are trading resistance and support, either you are trading smart money concepts, either you are trading ICT, just name it, whatever trading strategy you are using, you must know the price action movement is going to really help you. I'm Drew Lapolachi by name. I'm your fellow crypto trader. So in this short video, I'll be talking about mastering price action. How are the price action are moving? Because when you look at chart and you hear people are talking about analyzing the market, looking for trading opportunity, trading setup, all what they are talking about is taking a look at what price is showing us. And as a money maker, so if you want to be a money maker in the financial market, you must always react to what? To the action of the price. So you don't chase a trade, you react to what the market is showing. So there are essentially 4 types or 4 ways of price action, and there are 4 components of price action delivery that appear constantly across all asset classes, either crypto, forex market, stock market, indices, and name it, any of them. There are 4 components, and one of them is consolidation. The second one of them is expansion. The third of them is retracement, while the fourth one is reversal. So I'm going to talk about few of them in this short presentation. Now let's move on. So consolidation, as the name implies, so consolidation is just a situation whereby the market is what? The market is ranging. It's generally interpreted as a market indecisiveness, which end when the asset price move above or below the trading pattern. It simply means that the price is not either going up nor either coming down. It is moving within a range. It is moving within a particular area, just as this, where you can see this kind of bars, as you can see in my hand here. So the price is moving at that particular spot. It goes up, it comes down, but it is within that range. It doesn't go out of that range. And it's a very good trading idea. It's a very good trading setup for you if you know how to use it, because once you are able to see that the price has been able to break out of that particular range, that it swipe liquidity above, then or possibly swipe liquidity below, then you need to follow the market to the direction the price action try to take it into. So this diagram is just a typical example of what we are calling a range market. Can you see here? Here is a range, here is a range, and after the range is another phases or another price delivery step, which is what we call expansion. Now expansion or breakout market is the second level of price action delivery, and at the level at which price suddenly move from consolidation or on the ranging zone. This is called expansion or break price delivery in the market. So one market move out of a consolidation, out of a ranging market, is going to expand either to the upward direction or to the downward direction. And usually before price does that, you must have tried to delete or to clear the liquidity of the people who are trying to trade within that zone. That is why majority of the coaches and the online zone, they normally used to tell you that when market is ranging, when you see the market structure is ranging, it's not indecisive. You cannot say it's an uptrend, you cannot say it's a down trend. So you just stay out of the market, except of course if you are a pro and an expert who know how to benefit from the ranging market, because you can either buy or sell at the ranging market. Depends on where you are buying from. If you are using support and resistance level, you can buy at resistance level. So you can short at resistance level, then you buy at support level for you to make money for yourself. So this is called expansion market, and this is a typical diagram representation. Maybe you go to chart and show some of these things in the live chart. So the next one is retracement or pullback. So this is why a lot of people are losing money into the market, because they just come into the market, they see that the market is pumping, and they think it's going to be pumping like that without retracement. There are so many reasons why markets used to retrace. Number one is for what? When market lose momentum, when people are buying, sometimes sellers can step in and the buyers are going to lose momentum. That does not mean that there has been a change in the trend of the market. The market is still bullish, the market is still pumping, but sometimes sellers can just step in and try to pull down the price of that particular asset you are talking about or coin or you are talking about. So that can bring about a retracement or a pullback. Or sometimes some people are taking profit. People are entering market at different price, and always some people are okay with the profit they have already realized they want to sell, and those people that are selling, they are going to be what? They will be affecting the market to be pulling back. So retracement is occur when price responds to the most recent level, zones, area, or range. Simply means a movement followed an impulsive expansion. As you can see, this is a range market, just like I showed you earlier. And from this range, what do you see? You see expansion, price move up, and what do you see again? This is what we call the retracement. The price pull down back, but not up to the level of that range where the movement initially started. So it's going to pull back a bit of market to rest then and continue in the upward direction. That is why majority of experts, they used to advise you that you need to wait for price. So if you see a break of structure, you see a change of character, don't just jump into the trading. You need to wait for the market to go back to that particular spot for you to enter that trade. Because if you have entered here, for example, now you see this market moving, boom, 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 and you enter here, and once the market go down like this, you're already on loss, and possibly you can get liquidated or you are already out of the trade before market start moving up again. So retracement and pullback is very, very important. I must know that if you want to enter into any trade, make sure you are entering at a pullback at a particular spot where market is resting, where market is retrace back to where the regular movement starts from. And now the next one is the reversal market, and this is completely different from all other three price action we have talking about, because this is a situation whereby when the price totally change its current direction, it brings total change of direction of price action delivery in the market. Market who is already trending, who is already going up, as you can see, this market is uptrend, 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 uptrend. Now at this point, we have a break of structure. The market is going to pull back. There's that particular order, and we are likely going to see what we call a completely reversal. As you can see, this one is an unlike uptrend market for now. But at this point somewhere around the market is going to reverse and completely change direction. So when you have an uptrend and there is a break of structure or a shift in market movement, whereby the market now turn towards it turn to a down trade, that's what we call a reversal. A reversal market is a very, very good trading strategy that can give you a very huge profit if you know how to use it very, very well. But if otherwise, you can lose your hard money as well, because if you are trying to trade against the trend, you might find yourself in the problem. Because if you believe the market want to reverse and market starts pumping again, you will get liquidated and you will be out of the market even before you know it. So these are the 4 price action delivery that are very, very important for you to know as a crypto trader if you truly want to make money for yourself. This is what all the experts are using. This is what all experts are following. This is what you are going to be seeing anytime you open your price chart. So let's quickly go into the live chart and let me show you all these 4 components of price action delivery. Let's go there. Now, welcome back to my screen. This is a live chart of Jagawan of all the cryptocurrency, almighty Bitcoin himself. As you can see in the live chart, we have all the stages I've talked about of price action delivery. So, for example, let's look at this spot here. Let's look at this area here. Where is my, okay, let me go and pick up my triangle. So, this is my triangle above. If you look at this section around here, you can see that we are seeing something like a range. Don't delete. We are seeing something like a range around this particular area. Let me expand that. Can you see? This is what? This is the typical examples I'm talking about. A ranging market. As you can see, the price is going up, coming down, going up, coming down, touching this board, touching this board, touching this board, until when there is a breakout around here. Until when there is a breakout, the price break out around here, it go inside to the box again, come outside and break out, and what do you see? The price starts coming down. It starts coming down. It starts coming down without even trying to go back to that particular spot. Let me try, maybe I can pick out my arrow. Okay. And it's now shows, so here's the arrow. As you can see, the price doing what? The price starts coming down from right around here. So it's come down here and the thing starts collapse to the down trend. So this is what we call expansion. This is an expansion. in the market, because it's a spot whereby the market leave the range market and it starts going down. So let's look for another range. So let me copy this and show you. Let me clone it. Okay, that is not what I want to clone. Okay. So can you see we're having another range market around here. We're having another range market around here. Can you see the market is ranging up, ranging for like few days because it's on a daily chart. So what happens eventually? So the market eventually come back to this particular, break out of this particular area, and the market start going down. Market starts going down. So can you see it break out? And what do you see? You see an expansion. All these are just a typical example of a what? Of it works like a reversal, because if you look at this aspect as well, you are going to see that up to this moment the price is uptrending up to this moment until this range is formed and the market change direction like a reversal. So you can also call this one a reversal because this is an uptrend. But from here down here, it's because what? It's become a downtrend. That's another example of reversal on a price chart. So after range market, you have an expansion, and that expansion can be in form of reversal. It can be in form of a continuation of that particular trend. So that's an example of a range and reversal. Now let me quickly show you a pullback. Now let me show you a pullback. Even in this a downtrend, let's see a pullback. Let me expand it. A pullback. Now look at this area. Look at this area here. So if you can see that the price did what around there, can you see? This one form a lower low, lower high. Another was lower low, another lower high. Then what? Although there's like a change of character here, but that's not what I want to show you. What I want to show you is somewhere around here. What I want to show you somewhere around there. Where is that my pencil again? Let me bring my circle out. So can draw it anyway. Yeah, it's not even colored. No, I'll give it a color. Let me give something around maybe color yellow. So look at this around here. Look at this area here. So can you see here the market did what? The market goes up. What did it do? It come back here again. It goes up. It come back here again. It goes up. It come back. The market does not move in a straight line. The market moves in a zigzag format. Sometimes not even a zigzag, in the direction that you cannot even give it a shape. If you're a mathematician, someone who knows a lot about shape. So that's what we call a pullback. So the market goes up here. What did it do? It come down again. It goes up, it come down. So all those aspects of a spot or a zone where the market pull back add a possible way where you can find your trade entry. They are all the possible way where you can find your trade entry. Look at a typical example for me. See this market pump up. What does it do? It go down. So if you are the one that see this in a very long way candle, I believe that this market is going to be pumping and just jumping. What you have to see just that the market pull back with your money and start going up again. What do you see? Come back here again, that goes up again. Come back here again, that goes up again. That's what we call a reversal, pullback or retracement, which is completely different from the reversal. Because that's what we call a pullback or retracement. Completely different from the reversal, because the reversal is going to be a shift direction. So these are the typical example of a price action. We have a range market, we have we have expansion, we have a retracement or pullback, and we have a complete reversal. I hope you have learned one thing or the other. So just go it and watch out to your chart and try and spot all these particular aspects where market is ranging, where market is not either going up, not going down. So it is moving within the particular spot, up, down, up, down, up, down, until it breaks out of that particular box. At the same time, when you have that breakout, is what we call expansion. It can be down or up. So just go and try this. I still even draw Bolaji by name. I'm rooting for your started in crypto market space. Thank you for watching. See you in the other video.